All right, good morning, everyone. This is our special council meeting of Wednesday, December 17th, 2025. It is 9:03 a.m. and I will call the meeting to order. Before we begin, I'll state the township land acknowledgement. The township of Adjala-Tosorontio is situated on the lands within Treaty 18, being the traditional territory of the Anishinaabe peoples, including the Ojibwe, the Odawa, and the Potawatomi nations, collectively known as the Three Fires Confederacy. This land is home to many diverse First Nations, Inuit, and Métis peoples. We acknowledge Indigenous peoples as stewards of the land, and we honor their resilience as well as their culture and of our shared respect for the lands, plants, animals, and waterways which sustains us all. We recognize the injustices against Indigenous peoples and are mindful that the decisions of government impact our shared land and all the inhabitants. We commit to reconciliation as a journey to foster Indigenous cultural awareness and educational opportunities, establish respectful and healthy relations with Indigenous peoples, continue to steward the land and its inhabitants, and to cultivate an inclusive community for all. We're at item 2, which is the adoption of the agenda. Recommendation is that the agenda for the special council meeting held on Wednesday, December 17th, 2025 be adopted as presented. Do I have a mover for that recommendation? Councillor Meadows, seconded by Councillor Simpson. Any questions on the agenda? All those in favor? And that is carried. Item 3 is disclosure of pecuniary interests. Are there any disclosures at the present time? If you do find yourself in that situation at a later point in the meeting, please declare then. And we're on item 4, which is presentations. So the reason for today's meeting is the presentation from Andrew Marabella, project manager of Hempson, and it's with regards to our development charges background study and the council information session. So Andrew, welcome to Adjala-Tosorontio. If you'd like, you are certainly able to sit down if you'd rather stand or sit, whichever you prefer. And again, welcome, and we look forward to the presentation. I did just speak to Andrew briefly before council, so if there are questions through some of the slide decks, we will take questions at the time of the slide deck. And the floor is yours.
Great. Can you hear me now? There we go. Okay. Good morning. Again, my name is Andrew Marabella, associate partner at Hempson. We were retained to undertake the township's development charge background study and bylaw update process. And really today's meeting is just to kind of provide council with a bit of a project kickoff to that particular process itself, and to provide a bit of an education session, an update on development charges. There's certainly been a lot in the changes in the development charge world over the last number of years. And really this is to try and provide you with some of those updates and what we're going to be doing here throughout the process. Just through the clerk, is someone changing the slides for me? Okay, great. So we go to the next slide. Just in terms of our discussion topics and what we're going to be talking about, we'll go through the background. What are development charges? Really at the base level, what are these fees for, and what are they, and what are we collecting them for? We'll go through the Development Charges Act and some recent amendments. We'll go through the development charges specifically in your municipality. What are the eligible services? What are the current rates? And what is the actual Hempson approach to calculating DCs? And we're obviously working under the Development Charges Act, which is pretty prescriptive in terms of the way we collect DCs, the way we calculate them, and what can and can't be funded. Then we'll get through some timelines and some next steps, and effectively where we go from here for the development charge background study process. So if we start the next slide on terms of our development charges, they're paid for by development for development-related capital costs. And generally speaking, as a municipality grows, new infrastructure and facilities are required in order to maintain service level. You might need new roads, you might need to widen them, you might need new water and wastewater infrastructure, new recreation centers, new recreation amenities, all things that are triggered by growth. We can look at in funding a share or all of it through development charges. The principle behind DCs is that growth pays for growth. Recognizing that is the intention, we know that just by a series of legislative changes within the act, and there's some now statutory reductions, growth won't always pay for growth in its entirety, and some of that has to be recognized. through this process and through the calculation of the rates. So when we think about DCs, they're really just one tool that municipalities have to fund capital. So development charges, community benefits charges, parkland fees, we kind of consider that suite of the growth funding tools. They fund the broader share of cost to expand infrastructure to meet the services of new development. DCs are what we're going to be focusing on. We hear the word, or you might have heard the word community benefits charges, which is also a growth funding tool, but that can only be applied to developments that are of higher density, so 5 or more stories and 10 or more units. So largely that was a Section 37 density replacement tool and leveraged in higher density municipalities. So you'll see that as you get into the GTA, a lot more of those communities, Mississauga, Toronto, Vaughan, they have CBCs as they've got those types of dwelling units that can be funding them.
Yeah, I'm just curious, you're talking about density because of the way our current township is laid out. These are high density, as far as I'm concerned, high density units that are back-to-back townhomes. Would that be classified as high density?
No,
or is
not
it just levels.
It's just, yeah, because it has to meet both tests of the units and the levels test. So it has to be 5 or more stories and 10 or more units. So the back-to-backs in those cases wouldn't qualify. We got to be looking at more apartment type condo units.
Okay, thank you.
And then we have parkland fees, which are some municipalities have dedicated parkland fees, or others just kind of follow the legislation, which is in your case the right way to do that. Direct developer contributions is the other form of capital infrastructure, which essentially as part of the subdivision agreement process, the municipality would impose the developer to construct certain assets as part of their agreement. So local water mains, sewer mains, internal roads, street lights, that would all fall as part of the developer responsibility. Those costs, because they're developer funded, aren't included in the DC background study. So there's a distinction between what's developer funded as of right, and then what would be effectively developer funded, but through the background study process. And then property taxes and utility rates are going to be the next lion's share, and that's going to be funding all the statutory and non-statutory reductions on DCs, ineligible shares of development charge projects, long-term repair and replacement of existing infrastructure, recognizing that as a municipality grows and you now install a new growth-related piece of infrastructure, even though that first round capital might have been paid for by DCs, that municipality is now responsible for the maintenance, the operating costs, the long-term repair and replacement of it. So it's really important that when we're doing the background study, you're aware of all the capital costs that are in there, because eventually you will be responsible for that, and it has to be formed part of your tax base and utility rate base. Go to the next slide. So development charges have certainly changed quite a bit in recent years, and I'll use a bit lightly. It's been quite a lot. The government's priority is really to address affordability and build more homes. That's been the provincial government's mandate from day one when they came in the office. And there's been a series of housing bills that have led or tried to improve the construction of new homes. Bills 108, 138, 197, 23, 185, 17, and most recently 60. And I would expect there's going to be more that are going to come on top of that. And I'm not going to go through all of them, but I will touch upon what has changed and of significance to this particular process. Much of which has occurred has been about introducing statutory exemptions and discounts. Exemptions, residential intensification, so ADUs, additional dwelling units, are now exempt for the purpose of DCs. They've always been generally exempt from the payment of DCs. It clarifies a lot of what actually is exempt, so which is a good news story for municipalities. It kind of helps clarify those secondary suites. Nonprofit housing, affordable housing with some conditions, long-term care homes, those are all now exempt from the payment of DCs. There's also discounts on purpose-built rentals. So if you're going to be building purpose-built rentals, if you meet the qualifications based on the number of bedrooms, the DC rate is discounted as of right. The municipality has to abide by the rules of the legislation. So if the discount or the exemption and they qualify, we're obligated to provide that discount both at the lower tier level and at the county level.
Andrew, just a quick question on that. So if in our, we go through this process and have a new DC bylaw passed before next December and legislation changes, then the legislation would trump anything that would be in that bylaw that's no longer eligible for expense. Is that correct?
That's correct, yes. I mean, there's certain exemptions, obviously, if they don't, if they put in new policies on exemptions, that would typically do it. But if they change, sometimes methodology changes in the background study calculation process, unless they make it a retroactive clause, your background study would stand as is. But certainly if they introduce, for example, the discounts on affordable units or attainable housing, we don't know exactly what that definition is yet. So if something were to become clarified and they put that into place and your bylaw doesn't identify attainable housing, you would have to abide by that because that's a policy direction and it's an exemption that might come out of the legislation. So you are right in that respect.
Councillor Simpson?
Thank you. Through the chair to Andrew. I understand that there's a lot of legislative changes that the province is engaging in. At the same time, our municipality has a lot of growth pressures, and we recently saw an ERO from the province relating to growth in South Simcoe County, which the province identified as encompassing Adjala-Tosorontio, ESSA, and NewTek. So the wording they used was, we're looking at growth rates within the planning horizon of 10 years, which haven't been accounted for in previous studies or allocations. And that's wording directly from the province in that ERO. So, you know, that means that we as a municipality need to take into account that anticipated growth might significantly outpace any previous planning analysis that the county and the municipality may have done in the past. Another thing is when NewTek put forward a official plan pretty much the day before it was to be presented to council, the province asked them to pull it. And my understanding is that the growth targets which they had allocated in their official plan, which took them from 45,000 to 90,000 in the next 10 years, didn't go nearly far enough. As I understand it now, there is a likelihood that some of the growth allocations that NewTek is supposed to take on may be imposed on us and transferred to municipalities around NewTek. In the event that this happens, I think we need to ensure that our DC rates are at least as robust as NewTek's, and there's a substantial gulf between where we are right now and where NewTek is. Are you able to comment on that?
Yeah, so I mean, I think, and through the chair, I mean, it's a good question. I mean, we always have to be cognizant of a couple of things that we can only, when we're looking at calculating the rates, we're going to calculate them to the maximum permissible rates in this municipality. And it's a direct relationship to the capital costs that we're looking to fund. One big thing is the difference between NewTek and here is the water and the wastewater infrastructure is in the DC background study, is in their DC rates, where here the developer is funding the water and wastewater infrastructure. So when you're looking at the rates themselves, it's not always a direct apple-to-apple comparison. And also they're funding, you know, the treatment plant cost out in Collingwood, which is a huge portion of their water charge. So there are some differences. Notwithstanding that, I mean, we're going to really look at and take a hard look at your capital program and the growth that's here, and we're going to calculate the maximum permissible rates to ensure that all your growth costs are covered to the extent that they can be.
I think the current applicant is funding growth for Everett for the water, wastewater. They're paying for it. But I think any subsequent applicant that comes, and our growth nodes being Colgan and Everett, any future applications in those areas, I think we would need to change that funding model and amend it. And I suspect that in this next 10-year planning horizon, that we may be in a position where we're going to see significant growth in applications coming in both those areas. Thank you.
Okay, thank you. I've got two further questions. Councillor Meadows, and then your hand was up first. Councillor Meadows.
You stated that we weren't funding the water or wastewater. We just got a $35 million grant. So in essence, we are certainly funding some of that. So can we not use that for DC charges?
So the grant money, and through the chair, the grant money is going to be directly applied to the wastewater facility, right?
No, I thought some of it was going for the infrastructure and the main lines and that going to, you know, the development. So
Right.
this is what I was to understand anyways, that it's not just for the wastewater treatment plant. It's also to, for a pumping station for New Horizons, to the new wastewater plant, and also to put in the in-ground system. Force main, sorry, the force main.
So
Um,
decommissioning of a current wastewater treatment plant, building of a new wastewater treatment plant with the,
associated infrastructure. No, and that's fair. But if like I maybe put the question back, is the township on the hook for any costs above what any additional costs? Is the grant covering the entirety of the infrastructure needs?
We don't know.
those details are still be worked out with the grant funding.
I mean,
I just don't want to miss out on an opportunity that we do have an amount of money that's going into this system that we're not going to lose the benefit, by not charging the proper DC charges like we did in the last development.
So again, I think it goes back to your earlier point. The developer is paying their share for water and wastewater in that development.
that's what I
So
understand.
our share will be the grant funding. Their share will continue to be their share. So there wouldn't be a development charge charged because they're funding that themselves.
Yeah, but
Right.
are they putting $35 million into water and wastewater?
That's the reason why we have the grant.
But again, the township has the grant. The developer is basically using our grant money to benefit his own development.
Provincial grant money, yes.
Yeah, so and then so maybe just to add on to that, so under the Development Charges Act, though, there is a requirement, though, that if there is a confirmed grant funding source, we have to, and it's tied to that project, we have to account for that grant in the calculation of the rate. So that's why, so if there's any net residual cost that after we've taken into consideration the grant or after we've taken into consideration what the developer is planning to fund, and then there's a very high level numbers here, $1 million left that the township has to fund for remaining infrastructure, then I would say, yes, we can look at that cost and bring that into the calculation. However, if the total cost is to deliver the program is $40 million and we're in totality receiving $40 million and the township is not paying for anything, then that money has to be allocated and we can't collect DCs for them.
I guess where I'm getting at is like with this last development, we've been putting a lot of money into the existing system for repairs and stuff like that. So, or for additional things that are needed for that plant. And I just don't want to see the taxpayers on the hook for that. I mean, as far as I'm concerned, there should be a bit of a buffer there for us to be able to collect some monies for some of these unknown costs.
Yeah, and I mean, I'm more than happy to look at all avenues here and work with staff on that. We just have to, again, just putting on the legislation hat here, there's the process, we can't include the repair and replacement of existing infrastructure. So any regular, R&R work that the municipality is doing as part of the plant as regular asset management needs, those can't be included. But if there is any capacity adjustments or things that will lead to future plant expansions or work, then we can look at that being as a recoverable share. But there is a line that we have to walk when it comes to the DC Act and what we can include. But everything is on the table as far as I'm concerned, as long as it's justifiable.
Thank you.
Councillor O'Leary?
Through the chair, my question is to Mr. Enerchuk. This $35 million grant that we received from the provincial government, are there any burdens with that, or like interest or default payments or anything legal that we need to be advised of, or?
So I'm going to go to the CAO because I believe he would have the more specifics as to how the grant would be funded throughout the project.
Through the chair, there are 3 different areas where we get the grant funding is broken up. This $35 million is broken up into 3 different types of applications. So the first one, we get approximately, I believe it was 25% of the money after we signed the TPA. So that's the first agreement, which staff are working on now. And then there are a number of reports and documents that need to be sent in to the province to get the remaining other 2 sections. So we don't have any risk per se with regard to payback or interest, etc., as long as the project goes through, and then we spend the money as the project goes through. So if for some reason no money is spent, we just give the money back, and there is no issues with regard to, or no risk with regard to the municipality. As we go through the project, again, we'd have to be invoiced from contractor to pay the money, and all of that is reviewed by the province as we pay. I'm not sure if that answers the question, but
Supplement to that. Okay, should there be a lag in payment to the contractors or whoever, and should it bear additional cost because we were supposed to issue within 90 days, 2 million, 3 million, whatever, and the government was dragging their feet, we would make note of that in our subdivision agreement, that it was totally, payment would be totally dependent upon the government, upon the provincial government paying the township?
yes, that's correct. We do have to file then first and have those invoices, and then it goes through to the province. However, with 25% upfront, that is pretty substantial that we can get those working on it. And then staff will have to ensure that as we go through the second and third steps, that we send in those documentations sooner rather than later, to ensure the continuous flow of the funds.
Supplement to that. My question is directed at you, sir. If we have an official plan given to us, say January, and then before we enter into this contract, they ask us to withhold our new official plan. Now, obviously, we'll have a cost to produce that official plan. Can we deduct that as a DC charge?
So through the chair, we have included official plan reviews as part of our DC background study, recognizing that some of that cost is still what we call is kind of the benefit to existing, so non-growth related, but some of that is, and we have funded it through DC, so we can do a share of it, and we've done that before.
Councillor Simpson?
Through the chair. Couple of things. You just mentioned, Andrew, that in terms of the official plan, some of it is DC recoverable. Does that include work that was done on the plan? Because to my knowledge, we've been working on a DC since, or not a DC, an official plan since 2018. That the municipality's been putting money aside for an official plan since then. Nothing came of it. I think part of it was there was changes in legislation. And earlier this year, we, as a municipality, decided to do it in-house.
Mm-hmm.
So are those in-house costs also DC eligible?
But through the chair, we've included the in-house costs for OP reviews. I mean, we would treat it as if you were going to contract it out, you would be incurring those costs. So we would tie a value to it and recover a share. Like I said, it wouldn't be 100% growth related, because I do believe that there is a relative benefit to existing here. But part of that is related to and tied to growth and the trigger for that.
Supplemental. DC for industrial use, square footage. We don't charge DC on home businesses or for large structures that are built for home use, right? And we've seen on occasion that these structures are then converted from home use to industrial or home industry uses. In these cases, they avoid DC because they're currently termed as an existing structure. Are you able to suggest anything that we can do to be able to collect DC when the transfer of use occurs?
So through the chair, we actually had a call with the director of planning about this same issue about a week ago. And we are going to be looking at that as part of the DC bylaw to clarify it. There are provisions that one can include in the bylaw that relates to change of use provision. So if you do change from one use to another, you would get charged the DC on that, whatever the net of the credit would be. So the uplift, and then obviously if there's a change in use and the DC goes down, you wouldn't rebate. You would just, yeah, it would be a wash. So we can look at that, and that's something that we committed to staff to kind of take a look at the bylaw and those provisions.
Thank you. I'd be pleased to see that wording in there.
Just on that point, you do multiple DCs for multiple municipalities, I imagine. Some probably charge that, some probably don't. There's probably a reason why they don't, which would probably be to entice businesses and home industry to be in your municipality. Is there a formula that is best used, or is there something best practice and something like that that you've seen in practice?
No, and that's a good question. I mean, just because there's been so many changes to the DC world and even the way businesses are being developed now, like in a post-COVID world with more work at home and now with the exemptions for accessory structures, this is becoming more and more of a question. So we've seen in some bigger municipalities, they're pretty explicit on their change of use policies to make sure that no one's trying to circumvent the DC Act. So we can look at a little bit of leverage from that, but this is also becoming an issue in smaller municipalities now where you're adding on to your operation at home and then later converting it. And then if you are doing an industrial, it should perhaps trigger a change of use provision on there if the DC wasn't paid initially. So it's a bit of a mixed bag across the province right now, but we'll take a look at that and try and put something in.
All right, continue.
Okay, great. So if we go to the next slide, maybe just to kind of go through some of the Bill 23 changes to the Development Charges Act. And what came in from Bill 23 was ushering in of some of those new exemptions, partly related to the additional exemption of existing rental units or housing. So if you have a rental building, any existing units or intensification of it, you can add on to it without the payment of DCs, obviously with exceptions. The residential intensification in existing and new units, so that relates to our secondary suites, the ADUs, nonprofit housing, that's defined by the legislation, that would be exempt. Inclusionary zoning, which is related to affordable housing and mostly related to if you're building high-rise condominiums. And then we have those new discounts that I spoke about for rental housing development. So if you qualify for rental housing, 4 or more units, and there's apartments within them, based on the number of bedrooms, there's a scaled discount, 15% for 1 bedroom or less, 20% discount for 2 bedrooms, 25% discount for 3 bedrooms or more. So there's a discount, again, as of right on the DC. We go to the next slide. What happened after that was Bill 185 came through, the Cutting Red Tape to Build More Homes Act. And it actually reversed some of the changes that were brought in from Bill 23. The big one being the removal of the mandatory 5-year phase-in. So you may have heard about that through Bill 23. The province did walk that back. So municipalities can now impose the maximum permissible rate at the time bylaw passed and not phase it in. Certainly you have still the discretion to phase in your rates if you choose to, but it's not as of right. Development-related studies or growth-related studies were actually exempt from an eligible capital cost. Now that's been reintroduced. So things like visual plan reviews, development charge studies, secondary plans, those are all growth-related studies. We can now include them back in for DC eligible costs. There's a frozen time period on DC rates. So if someone includes a site plan application and it is deemed complete or a rezoning application, the development charge rate is frozen at that particular time, even if the permit is issued later. So they reduced the time period on that. It used to be 2 years from the time it was approved by council. Now it's down to 18 months in an effort to get more homes and more shovels in the ground. And then there's now new notice requirements, which is a bit of a good news story. If you don't have a local newspaper, you can post it online, and that'll satisfy the Development Charge Act requirements. There's new exemptions for affordable and attainable housing. Affordable housing exemptions, they came into effect on June 1st of 2024. If you meet the threshold from a dollar perspective or the rental perspective, that's outlined by the provincial bulletin, they're eligible for a full DC exemption. Those developers would have to sign an agreement for a 25-year period to ensure that that unit remains affordable over that period in order to maintain that exemption. They talked about attainable housing, but there's no mention of an exemption and definitions around that. So I think that's still one of those things that I mentioned kind of in my earlier comments might still be to come over the next couple of years. We'll go to the next slide. Then DCs continue to be a central focus in more recent bills of Bill 17 and Bill 60. So in addition to those changes, some immediate changes that come in, DC's exemption for long-term care homes, so they're no longer payable. There's a streamlined process for certain bylaw amendments, which is in some respects a good news story. If you wanted to adjust your expiry date or reduce the payment of DCs or adjust the index provisions, always in the benefit to the developer, you don't have to go through the lengthy background study process, public meeting. You can just bring forward a bylaw amendment, give notice of that, and pass it accordingly. One of the bigger ones for municipal staff.
Can I just
Yeah.
The notice provisions, that would just be statutory notice provisions, or would you have to circulate to the ones that you've had to circulate originally to the DCs?
It would just be these statutory notice provisions of passage. So once the bylaw is passed, you'd have to notify everyone that you've now amended your bylaw to extend it out another 5 years, for example.
Okay.
The third bullet point, the deferral of residential DCs until occupancy, that is a bigger ticket change that's come in. Meaning that as of right, developers have the authority or option to defer the payment of DCs to occupancy. So there's a bit more of a lag in terms of your collections and your cash flow on those types of developments. And that would apply virtually to also a bit more of a learning curve for municipal staff in terms of how to administer that and then how to track that. And then there's the revised DC freeze rule, which effectively, because of the freezing of the rates and the interest applicability to it, a developer at the time of payment can't be paying more than the prevailing rate. So they'll always be guaranteed either the frozen rate or the rate that's enforced, the lower of the two.
Okay, thank you. Councillor O'Leary, you had a question?
To the chair. Andrew, is this a definite that they can defer the payment until occupancy, or can it be a mutual agreement to phase it in, like 50% at closure and then another 50% at occupancy, or is it just straight
Yeah, so through the
occupancy?
Yeah, through the chair. That's a great question. So it is as of right to go to occupancy. However, they've also put in a provision, getting a little technical, there's Section 27 agreements under the Act, which you can pay earlier. And they've said you don't have to go through a formal agreement process. So if the developer chooses to phase it in or pay earlier, they can still do that. But if they ultimately say we want to pay at occupancy, the municipality has to oblige by that.
Councillor.
You said if they want to pay early, the municipality has to accept it? No, I think we have the ability to say that it can be paid at occupancy, right?
They have the right to say that it's at occupancy by way of legislation. So if they want to pay at occupancy, you have to provide that authority for them to do that. But if they wanted to pay earlier, you can also accept an earlier payment.
Special.
Yes.
Right.
Yeah, I mean, I pay.
I think we've
Hey,
had-
earlier payments are always better than later ones. Yes. Yeah.
I think the hesitation is because in the past we've had some difficulty in how that's been administered.
Oh, okay.
And so there's a little bit of skepticism, I think, in this council with early payments. Thank you.
Okay. And then there's a series of changes that are still pending, some regulation and some have now come into force. So there's talk about merging services for DC credits, so just the reimbursement arrangements, which the ERO has been posted and now closed. There's a limit on eligible capital costs, which we'll talk about, which effectively includes or limits how we can account for land in our level of service and our calculation of the rates. We have to define local services, which is an important element, and that goes back to making sure that there's a policy in the background study now that identifies what is developer funded and what's going to be funded through the development charge regime. And that's something that the province is requiring us to outline. A lot of municipalities like yourself manage those types of policies internally with your own framework, but we have to now put that in as part of the background study. So that's something that's new that will come forward here. There'll have to be an increase in transparency on the benefit to existing allocations, and that's the non-growth share of the work. So we'll have to identify in the background study our methodology, which from Hemson's perspective, we don't see an issue with that. I mean, our background studies usually include what those benefit to existing shares are. And then where there's going to be a standardization of RTC studies and annual reports, some of which is related to the financial information reporting that you'll have to do to the province. We'll go to the next slide. So just on that Bill 60 part, the 4 items here that have come out, and the one being the special treatment for land acquisition. So one of the changes that has come out here is land can no longer be included as part of our service level calculation. I'll get into what that means in a few minutes, but effectively land is included as a cost that the municipality is responsible for. So we at Hemson have always included the land as part of what considers of the infrastructure and the assets that you own to establish what our historic service level is, which is a function of what we can fund on a go-forward basis. The province has now said that we can't include land as part of that service level calculation, but we can include land as an eligible capital cost in our DC program, so what we can actually fund, but it has to be a separate category of service. So land will no longer form part of a recreation program, for example. It'll be its own category for land acquisition. So there's some changes there. The land as part of the service level is much more impactful for GTA communities, which land represents a much more significant cost of the overall program. The mandatory local service policy, which we talked about. Oh, yeah, go ahead.
Sorry. Thank you. Through the chair. You mentioned the land cost. So is that land for recreation then?
Land for all services.
All services.
I just use your recreation as example.
In our municipality, we have Simcoe County forests, which are utilized for recreation. We have municipal parks, obviously. We also have TRCA lands that are utilized for recreation. Those lands have not historically been calculated as recreational lands and opportunities that we have as a municipality. Would those be included then in those calculations?
So with through the chair, with parkland and those types of things, there's also further restrictions under the Act. So the acquisition of parkland can't be included as part of the DC because those are funded through the Planning Act provisions. But the development of parkland can be included under DCs, but it also gets a little trickier about TRCA lands. If you're not actually responsible for the costs or anything to do with that particular asset, we also shouldn't be included in the DC study. But we will, again, for the purposes, this land is now out for the service level calculation, so it's a bit of a moot point anyways. But we will, any new land requirements we have to take into consideration of where you might be buying land for non-parkland related services.
So supplemental. In one of those, there was a subdivision that the municipality approved in the last year, which abuts a TRCA land, which provides us with an opportunity to perhaps develop a park within that. Would that then be considered DC eligible?
If the township is incurring costs to develop that parkland, if you're going to be putting amenities on like a playground or a splash pad or whatever the case might be, we can include those amenities in our background study. So the amenities are still eligible.
So like trails would be included?
Trails we can do, yeah.
Okay.
Yep.
Do we need to have additional conversations then with regard to that? Because I don't think there is an official plan to do it, but it's something that I suspect with growth, we will have that need to perhaps make the trails better.
We can take that comment and we can speak with staff about that. I'll get into there are, again, restrictions on how much we can fund through DCs. So again, we may, always good to include if it's something that there's an expression from council to do that and you're responsible for the cost. It's just how much we can actually fund from DCs is a separate question.
Thank you.
Okay, so then we get into the financial statements and disclosure to the minister, which are going to be more technical requirements that the municipality would have to do on the financial statements, more from the treasury standpoint of the way they have to disclose the use of DCs. And then disclosure to the minister, they may ask for the background study or the bylaw, which is a bit of a new requirement, and not sure exactly what the intention behind the disclosure to the minister is, but that is now part of the proposal. Okay, so if we go into the next slide in terms of our DC Act requirements, so your DCs are imposed via bylaw 2184, which expires in December of 2026. The intention here is to pass a bylaw sooner than that to facilitate some of the agreements and some of the work that's going on in the municipality. The maximum life of a DC bylaw is 10 years after the day it comes into force. That has now been increased from 5 years. So your current bylaw has the 5-year expiry on it. Should you want to change that, which I don't think is the intention, you could update and extend out that bylaw a further 5 years if you choose to do so. Prior to passing a new bylaw, the municipality has to effectively do two things. No, it's 10 years now. It was 5.
Okay.
Yeah. Well, it is 10 via legislation. Your bylaw still has 5 in it. Yeah. This came in after your last bylaw was passed. So yeah, no problem. So in order to pass a bylaw, you have to do two things. One, you have to undertake a background study. 2, you have to hold at least one public meeting with sufficient notice. Appeals are adjudicated at the Ontario Land Tribunal. So putting the extra emphasis on here that anything that we do here will be closely watched and we need to make sure that it's defensible. So you'll see my guard up on just making sure that any requests of capital costs and what's in and what's out, we can defend it at the board if it needs to. So then we get into some of the services that are applicable here in the township. So your in-force services, we have fire services, police services, parks and recreation, development-related studies, and we have what we call services related to a highway, which is related to your public works, domes, fleets, buildings, and then we have roads and related infrastructure, which is included within that. You'll see that I've kind of highlighted a new box, which is called land acquisition, which is new, and that's part of the Bill 60 requirements. So we'll now have a new category to the extent that you have land requirements in the next 10 years. We will be bringing in a new category for land purchases to fund under DCs. There are other available services that are eligible for DC recovery, some of which might be covered via at the county level, some of which like water and wastewater, which aren't right now included. And to my understanding, they are still being funded from the developer, but notwithstanding that, we will chat with staff about if there's any residual cost that we need to include. We will look at that closely. Things like housing and parking, they used to be DC eligible. They've now got removed from a DC eligible framework and they can't be included as part of our future DC studies.
I just have one question, Andrew, just with regards to most, as you said, most of these are taken care of by the county.
Yep.
On the other available ones. The stormwater services. So we of course have multiple stormwater management ponds. The maintenance of that is of course something that we can't DC because they're already existing. So can you explain to me what, if we were looking at stormwater services in a DC, how that would apply? So is it that an existing pond that somebody would be connecting to, or how does that work if we were looking at putting that into forest services?
Yeah, no, that's an excellent question. Stormwater in more recent DC studies, that capital cost starts to narrow a lot more now because a lot of which is now being directly funded by the developer as part of their subdivision agreement, or to your point, being funded separately through utility function as part of just regular maintenance costs. But we have included ponds, for example, if they're more to facilitate area-specific DCs, so kind of arrangements between different developers to fund the infrastructure. A lot of the linear stormwater works, whether that's included as part of the roads program or a separate cost, we've also included that. But again, it's one of those items that it's starting to narrow a little bit. I mean, we get into some of the GTA communities. If you think about Vaughan, the Black Creek Channel work, so it's a building a channel, remediating the floodplain so we can build higher. Those are kind of more traditional stormwater, bigger ticket projects, but a lot of it's a little bit more of a smaller localized case to facilitate some front-ending arrangements.
I've got some other questions. I've got Councillor O'Leary and Councillor Simpson.
I just need clarification on this, the stormwater management. There is a stormwater management pond in the subdivision. I'm not sure whether that's their responsibility or ours. So if it's their responsibility, we can't DC it.
Correct.
Okay.
Simpson?
Through the chair. With regard to services applicable, just looking at planning generally, like I'm from Ward 1, which encompasses Colgan, where we had about 644 new houses that were put in. At this time, like with that subdivision being in, that might be one of the biggest settlement areas in our municipality once it's complete. In previous DC background studies, a community hall or community center was never envisioned as part of that. Can we now, there is a need. Residents approach me all the time. Hey, look, we want to do something. Can we do it somewhere that's close to home? Are there any facilities? There's no township facilities. There are very few private facilities that are available to residents to hold events or whatever. Can we, is that something that can be added in at this point, or is that something that would be in the new background study? I know there are allocations for things like storage units for sidewalk plows that were put in. And in fact, in this year's budget, we've allocated an amount from DCs for that. Can we now say that there is justification that we require some sort of municipal facility within the settlement area that can support some recreational activities?
Through the chair, yes. So if there's a need for facility and there's a demonstration and commitment from council in order to do that and wanting to purchase or construct, and it's new, then we can put that cost into our background study. Again, just qualifying that just because we put the entire cost in does not mean that the entirety of it will be DC eligible or even funded in this planning period. It may have to be recovered from DCs over a longer term. But if that need and that commitment is there, obviously the growth triggers are there, and there's more new development coming, then I think that meets the test to put it in.
I think in the next planning horizon, the next 10-year planning horizon, there certainly will be a need for significant, community centers that have recreation, that have libraries, that have additional services. Are we able to retroactively do anything? Because that 644 houses came and there was that need which wasn't identified. So are we able to now say, hey, because we had that, there may be an opportunity to pull funds from existing allotments within the DC background study that was done? Can we utilize some of those funds for that project?
Yeah, through the chair. So that's a good question. The term retroactive, I guess in this case, it's more of the development has come in, they've paid a DC, it's now sitting in the municipal reserve fund under Parks and Recreation. When we put a new capital project in, into our capital program, let's say there's a new facility in 2030 that we're planning for, we would have to, as part of the act again, utilize all existing DC reserves and apply them towards the projects in our capital program. So we have to technically expend the money before we can charge a DC for it. So that money that was collected will be applied to future projects.
Thank you. And as a supplement, I realistically, with the growth that we're seeing in Everett, I think there is a need for a significant community center and library facilities in Everett, right? So that's one I'd like to see. I'd also like to see one for the south because I suspect that growth in Colgan will continue going forward. And I suspect that growth in both areas of the municipality will be sufficiently robust that I suspect populations may be comparable in the north and in the south. So I think those facilities are warranted in both areas, even if applications may not be presently in progress.
And so I would also agree with that point that we have to be looking at this. So we don't currently offer that level of service, so that's not under DCs.
Right.
So I would imagine if you were looking at that at two facilities of, community center in nature, a large chunk of it would probably be existing community with some development then related in future years, because it's not something we provide currently. Or how would that work? I'm just looking for the framework. Like,
Yep.
I'm thinking it's probably going to be a 75 to 60% covered by existing and the rest by development, just so that we can start the process and putting those in place. And then I guess the other question is, what kind of commitment do you need? I know you're going to have that in your further slides from council. Then if that was a desire for council to see, would that be in a forecasting study, or would that be an intention of council by resolution to facilitate you having the information to put into a DC background study?
Chair, that's all excellent questions. Maybe I'll go in a bit reverse order, and then we'll work way back from the commitment side of things. Certainly, if it makes its way from, we have it in the capital budget, if it's in your Parks and Recreation Master Plan, if it's in a document that's been approved, there is expression of intention. There's a commitment that this is what's required in the municipality, and we can leverage that. If it's not in there, and obviously things change by the minute in municipalities, I would be coming back to council once we've got our capital program and before we prepare the study, saying here's the rates and here's the capital program, and we're looking for, just to be very clear to the industry, the expression of intention, whether it's by resolution to adopt the program to include the DC study. That way it's very clear that this is what we are planning on, and there's no miscommunication about your intention of that. So that would be one way to think to address that. In terms of the service level calculation, it does get tricky, only because one, you've mentioned you don't have that facility, but we also consider the services that you provide at the municipal-wide level. So not necessarily at the amenity or project specific level. So within Parks and Recreation, we measure the service level at, here's our service level per capita for Parks and Recreation in the municipality, but we're bound by the service level at that department level. The issue becomes, if we don't have facilities in our service level, the amount that we can leverage and collect on a go-forward basis might be limited until we start to bring that facilities and those bigger ticket items into our service level to leverage our DC. So even if we have, theoretically can fund 100% of that community center, it might take us several DC background studies to recover for it, because we are bound by what the service level that we provided in the preceding 15-year period. So we'll always be somewhat capped by the services that we had, which will take us a lot longer to recover, which by in short might mean that you might end up funding some of that from property taxes because you just might not collect enough DCs, in the next 10, 20 years in order to do that. That help? Yeah.
Thank you.
Great. Okay, so then we can get into maybe just to very, very high level, the DCs that are currently in the municipality. The township-wide rates, you'll see two. There's for a single and semi-detached dwelling unit, it's $12,400 per unit. You'll see that the rates are differentiated by dwelling unit type. Multiples, apartments, 2 bedrooms or more, 1 bedroom, bachelors, and the rate is kind of scaled down based on that, and it's based on the occupancy patterns within them. So that's what drives the difference in the rates themselves. The non-residential rate is levied on a per square foot of gross floor area basis. And then in addition to the township-wide rate, there is a area-specific charge for the Everett settlement area, which we will look at as part of this process and whether that is still required, which is an additional charge for roads within that service area. I saw some hands up as I'm talking, so.
Yeah, and I appreciate it. And I think the Everett Sunland area, probably you're going to find out from staff, we probably don't need that anymore.
Yes.
So I'll go to Councillor Cox and then Councillor Simpson.
Yeah, through the chair to Andrew here, what other municipalities were referenced here?
This is just your municipality, the rates that are in force.
There's a column that says, oh, all the multiples, never mind.
Yeah, that's okay. Yeah, no, it's just the other kind of dwelling unit type. Yeah.
Yeah, Councillor Simpson.
Through the chair. So with regard to the DC for homes, I understand that bigger estate homes tend to have an increased reliance on municipal services just because of the nature of the size of the home means that perhaps they'll have more vehicles that utilize roads, more strenuous usage of water and wastewater resources, and perhaps more residents that can be accommodated in a home. Is it possible to have a separate rate for homes that exceed 4,500 square feet, for example, and a separate rate for homes that are under that amount?
So through the chair, that's a great question. It does get tricky because the way the information is provided from Statistics Canada, it's based on the dwelling unit format in totality and then the occupancy patterns within it. So when we calculate the rate, it's for all single detached dwelling units of that format and then the average PPU, the average people living or residing within that unit. And that's the basis and really the root of our calculation. We've seen some municipalities discount smaller format units as a means for entry-level homes so that they can be more of a gateway into the community to kind of encourage that development. We don't see them too often in many municipalities or any that I can think of offhand that would charge an extra rate for a bigger estate home because it's still rooted in the occupancy pattern. So the policy direction to reduce the rate for a smaller entry-level unit, that is a policy direction, but that is a discount or a reduction, and that would have to mean that lost revenue has to be made up from other sources and non-DC sources. So that would be a property tax supported subsidy if you were to do that.
We could do a reduction for entry-level homes as a policy exercise, but not a separate rate in and of itself.
That's right. Yeah, because we wouldn't. It'd be hard to justify or at least calculate what the actual PPU or occupancy pattern is of those smaller units or larger units because we don't have the data for it. So we would calculate the rate for a single, and then you would discount it if you wanted to. Should council choose to adjust it for the kind of an entry-level unit, but again, that's lost revenue that we can't make up from higher DC, so that has to be covered by taxes.
Thank you.
And on the other equation of that is if you have an estate residential house, you're probably paying more taxes. So your DC rate may not account for it, but your tax rate will.
Yeah, that's right. Like there's the operating side, like the capital is the first round capital, but if you have an estate home, you're likely paying a higher tax rate, and that will cover, your general maintenance costs of your municipality.
Councillor O'Leary?
Can we not charge our DC rate on the number of bedrooms per household? Our water's calculated that way.
For a single and semi, you mean? Because on the apartments you do.
No, I just mean a regular detached home. 4-bedroom versus 3-bedroom.
Right.
Can we not have a greater DC charge for a 4-bedroom versus a 3-bedroom?
Again, it goes back to some of the way the information comes from Stats Canada and the kind of the justification around it. That is not the norm in Ontario municipalities, put it like that.
Okay. Any further questions?
Okay. So we'll just go through at a high level our DC study process. So the first thing that we do is we look at the development forecast, the amount, type, and location of development. We forecast over the planning horizon, which sets the basis for our growth-related capital infrastructure needs. So what we will need to build in order to accommodate that type of development. Then if we make our way down the flow chart, you'll see on the far right, we have our 15-year historical service level. And I'm going to go through that in some detail in the next slide. But effectively, how much we can fund from DCs is directly related to the services that we've provided in the municipality over the preceding 15 years. So we're capped at that service level and what informs our DC capital spending program. So once we have our growth-related needs, we do our service level analysis, we have an understanding of our capital needs eligible for DCs. There are a series of reductions or adjustments that we have to make to the calculation before we can figure out how much we can calculate the rate by. So any grants or subsidies that are confirmed and have been identified, we have to include that and capture that in our calculation. Any shares of the program that we consider to be a benefit to existing development or non-growth related, we have to adjust or deduct that from our calculation. Any existing DC reserve funds that you have on hand, which you've already collected for, again, we have to consider that. And if there's any shares of the project which might benefit or being constructed to benefit development over a longer term, we have to adjust for that in our calculation as well. Some of that might be project specific, but some of that might just be related to if we exceed our service level cap, we would have to move some projects into a longer term planning horizon and recover that from our next bylaw. Once we've made those adjustments, we have our costs eligible for DC recovery, and they're delineated between your residential and your non-residential sector. Residentially, the charges are on a per unit basis. Non-residentially, they're per square foot or per square meter of gross floor area. You see on the far left, there's the operating and capital replacement and asset management cost analysis. As part of the DC Act, we have to inform council that if we're looking at our capital program, what are the net operating impacts associated with it, and what are the asset management obligations for it over the long term, so you understand what costs you will be taking on by undertaking this type of program. Obviously, those are estimated at the time of the study, and you'll have to come to reality as you kind of in place that infrastructure. So we'll go to the next slide. I'll just touch on the historic service level because this is a really important part of DCs and gets into the technicality of it a little bit. So we can't use DCs to increase our level of service above the 15-year historic service level, and that's done on a service by service basis. When we think about the service level, both the quantity and the quality of service has to be considered. So if we look at a fire station, we're looking at the size of that fire station in terms of gross floor area, then we're looking at the replacement cost of that facility. When we think about the valuations for the purpose of the DC, we don't use discounted values or things that are when you first acquired that asset, it's the cost to build and in place that infrastructure today. So we try and leverage as much as we can from tenders, talking with staff, what we see in other municipalities in terms of identifying the appropriate replacement cost of that facility. It's extremely important because those quantity and quality determination to service level, it sets the limit on eligible DC funding. And you'll hear me use the term maximum permissible funding envelope or maximum allowable funding envelope. So there's no service limitation for water, wastewater, storm infrastructure. So those are more bounded by legislative requirements. We need to undertake those capital works to facilitate development. We don't have anything to restrict us on what we can fund or prohibit us from funding that work. So when we think about our service level, all we think about is what is our 15-year historic service level. So based on our historic 15-year population and the services that we had, that's going to give us $1 per capita or $1 per capita an employee. Then we look at our forecast over the next 10 years. That forecast in terms of new units translates into population and employment. We look at that service level multiplied by that forecasted growth, and that gives us that maximum permissible funding envelope. So as a very high level example, if we have a service level calculation or a funding envelope of $1 million for parks and recreation, and we go to staff and we talk with council and we come up with a capital program of $10 million for recreation. Because of the service level restriction, and assuming all that whole 10 million is growth related and we want to fund it all from DCs, we can only fund $1 million from development charges. The remaining 9 million is still DC eligible, but has to be recovered from future DC bylaws. So there's a direct correlation to what we've done in the past, what we do in the future, and as we in place that infrastructure, it builds up that service level.
Right. So you're echoing the point about the community center a few moments ago. If we wanted to build a $10 million community center and our current service level is $1 million, we could budget $1 million for a community center now.
For DCs, yeah.
Funded if we wanted to build the community center and then recover the 9 million over the next
several years. You got it.
All right. So I've got Councillor Cox and then Councillor Simpson.
Yeah, through the chair to Andrew, I'm just kind of confused as to why you can't use the DCs to increase, because generally with development, isn't there a natural increase to service levels? Because like somewhere like in this township, when you look at Everett, 15 historic service levels would be very minimal. That's going to substantially increase, like substantially. So I just don't understand. I guess is that like it's mandated through like Bill 23 or the other bills mentioned in?
Yeah, so through the chair, that is one of the limiting factors of, that's the Development Charge Act framework in itself. We are bound by that historic service level. So part of it is to make sure that municipalities aren't constructing infrastructure well beyond their means. Again, it's a legislative requirement, and we're bound to do that for the calculation. But it does point to the notion, though, that municipalities do need to be using their DC funds and constructing new infrastructure, because there is a real issue that if you're hoarding DC funds, you might have heard that, in the news, and I don't necessarily agree with that, but if municipalities just collects DCs but doesn't actually in place anything new, it does also have an impact on your ability to leverage that and fund new infrastructure going forward, because we're not expanding our service level in line with population, and we're putting, downward pressure on what we can continue to fund on a go-forward basis. So there is a good kind of carrot there to make sure that as DCs coming in and growth is occurring, we're already in place in the infrastructure necessary to support.
Councillor Simpson?
Through the chair, my question was also with regard to the historical service levels. In Everett, for example, historically over the last 15-year period, we would have had a population under 2,000 people in the settlement area. With a projected population within the 10-year planning horizon, I suspect, there's no clear numbers yet, potentially up to 20,000 people, right? The needs for a community of 2,000 versus the needs for a community of 20,000 are substantially different, and perhaps a $10 million facility won't do. Probably 20 to 35 million for something to support a town or a settlement area with 20,000 people. How would you be able to game out how we proceed in that situation? And that is also the case in Colgan, where before I think there was 70 homes in Colgan, and now we've got 644, potentially more applications on the way. How do we overcome this 15-year historical service level? Because where there was nothing and no services, we now have a population that is telling us that they want something and that they want a lot more than what they have. And these are residents that are coming from other municipalities that have significant services.
Yeah, no, and through the chair, and I appreciate that and somewhat sympathize with municipalities who've had a lot of growth in a very short amount of time, and now you're trying to plan for demands of these residents, and perhaps some of them coming from GTA where all these services were there. But I think there's the two parts of the service level calculation. There's a historics level, but then we're also multiplying it by the forecasted growth. So we are getting a little bit more on our funding envelope by if our future growth is exceeding what's been done in the past, we will have a larger funding envelope. But it's also, from a calculation perspective, it's the same because we then divide it by the same amount of forecasted growth. But we are still limited in that historic pattern, and that does place a bit of a limitation on how much we can fund. I mean, I think from our perspective, we're going to try and make sure that we capture every dollar of existing infrastructure that we have. And that's one of the things that I've talked with staff quite a bit about is we've met with them. We're trying to make sure that every asset that we own is in the inventory so that we're leveraging as much as we can so that we can maximize the DC rate. But I mean, we're legislatively capped by that. Yeah.
As a supplemental question, in terms of growth projections, what do you utilize to determine what future growth will look like? Because council may be aware of additional applications that may be coming forward or that are on the horizon, but certainly they're not captured in any future growth studies. Future growth studies from County of Simcoe, for example, are a joke because they show us having 700 additional people till 2051. when in fact, so they, in the study, it went from 10,000 people to 10,000, 700 people, for example, when our population potentially in the next census will come out at probably 13 to 14,000. Right. So those growth projections that the county has are completely meaningless, in my opinion. And, I don't see any growth projections that adequately address where we are as a municipality at this point or where we're going as a municipality in the next 10 years. So where would you get that number?
Through the chair, that's
Based on our growth projections.
We don't have growth projections.
So, answer your question.
yeah. So we're through the chair. We appreciate the county's numbers, and things have materialized a little differently on the ground than what was projected. So we are taking a bit of an alternative route, and we've been talking with staff about the development applications, the commitments, and the timing of development. So we're trying to come up with an alternative to that, which obviously shows more growth than what was projected in the county. So kind of schedules have been there, but something that we're still working through, but it is a bit more rooted in application activity and when we think the development will occur relative to when the treatment plant works are complete.
I just wanted to provide a comment, and I think that's one of the reasons why we've seen in our budgets over the last few years anyways, is trying to, with the service levels, increase them periodically in small steps, which doesn't have a huge impact on the tax base, but does allow us then to actually charge in DCs more of a rate. So you have seen over the last 4 years that we have tried to increase levels of service and recreation, for example, so that we can gradually increase our rec DC charge so that development is paying for development in the future. I did have a few hands. I have Councillor O'Leary, and I think I've seen Councillor Meadows.
Andrew, just something you had said previously about waste management and water. We do have our own water service for phase 1. That would be the L&M project, the 650 homes. So that would be a DC charge because it's our water mains, it's our towers. And my understanding is that in order to supply services to the Barzil lands, that Farsight's going to have to drill an additional well, and then they'll have to put in an additional reservoir and everything like that. So I just wanted to bring that to your attention to make sure it wasn't something that was missed. Good.
Councillor Meadows.
Yeah, through the chair. I also wanted to know about the growth forecast, what we were using. I'm quite concerned with the forecast because the forecast for Colgan were way off. And especially with the new provincial policy statement that came forward while all this was happening. The mayor made a comment that the staff know what the forecasts are. Can we have some sort of clarity on what we're using as forecasts then? Because I'm sitting here, I don't know what our forecasts are, growth forecasts are at all. So what the county says, like Mr. Simpson said, or a joke, and if staff can provide us with some of what their 10-year forecasts are, I'd like to hear them.
So I'll go to the CAO on that, but I believe we've had 2 meetings in recent months to indicate what potential growth numbers will be in the municipality. And those numbers will be shared with the consultant and they'll look at the entirety of the township to see if those fit within what we need for DCs. But I'll go to Chris for
that. Through your worship, what we're taking a look at and what we're discussing with the consultant is about the surety of what is going to be coming on. Obviously, with things that are already registered or through OLT, et cetera, there's more surety there. So as noted, there's a approximately 2,000, units that have gone there. The other ones, there's a little less surety on them, especially if some developers or future developers have not come in and spoken with the town. So for example, we're not sure what's exactly going to happen in Colgan. We just knew that there will be requests for growth in that particular area, but we don't know. We don't know what those numbers look like. With regard to other discussions that we've had, say in Everett and to the west, we have basically a forecast number that we're utilizing. And again, we're not sure exactly what that is until they start going through the process and start identifying and getting more specific. But we have a general idea with regard to what we want the wastewater treatment plant to do. As noted before in council, there is a limit with regard to what the receiving body could hold. And right now, our data indicates that's about 7,000 cubic meters per day. And so if you backtrack that and divide that up and make some guesses, it looks like it would be approximately 4,000-ish residents or units. But again, depending on what comes forward with West Everett, that flow could be divided into commercial, or it could be divided into institutional, or what have you. So until we get to those particular numbers, but again, it's kind of an educated guess with some estimates right now. And as we go through the planning processes, et cetera, then we'll get some additional numbers. But right now we're kind of looking at with an assumption that maybe all of that flow is residential, which it won't be. And that's where we kind of come up with the help from the consultant to try to pick out some of those population numbers. Because again, there is a lot of still ebbs and flows and still a lot of uncertainties.
Thank you. And I don't think to draw back to our last DC background study, it's no different than that. There's projections that are in place at the time of the DC background study. There's also assumptions. And the consultant takes into consideration so that we can at least have a fulsome picture. It doesn't mean it's going to happen, but at least we have the ballpark figure of where DCs might go to based on a population.
Well, supplemental.
Mr. Meadows?
Okay, so by what you've just told me, we're back to using the 2.67 people per household.
I didn't say that.
Sure you did. He said up to about 4,000 people. 4,000 people, we got 2,000 homes. That's 2 people per household. That's my calculations. This is where I'm having a bit of an issue because we use the same calculations for Colgan and we got 7 to 9 people per household. So,
Councillor Meadows, I'm going to suggest that we wait for the consultant to provide a background study for council review.
But I just want our
see that what the projections are recommended.
Well, I'm just saying we're back to using the same calculation as what we are in Colgan, which is off. And if he's doing the background study, the consultant should know exactly what's happening within our housing that's coming into the township right now. We use the wrong numbers. We're stuck here doing the same problems as what was happening in Colgan. So we're going to be below what we need for DCs for this township. So I'm just putting it out there. This has been the issue. You know, since the new PPS came forward, you're allowed 3 units per house. We can't collect DCs on that, but we have to be able to calculate properly when it comes to the forecasting for this township. If we don't get the forecast properly, the calculations are going to be off not only for the wastewater treatment plant, for the water supply, and also for the DC charges. So I'm just saying, like, we ran into this problem in Colgan. I just don't want to see the same thing happen in Everett. Thank you.
Okay, thank you. And I might add, we're not talking about Everett. We're talking about the township. We're talking about the entirety of the township for DCs. So we want to make sure that we capture everything so that we have that in our DC bylaw. Andrew, can you explain to us how you would derive a population number? Is that based on historical data?
So through the chair, the population numbers on the forecast side of things are usually triggered. Obviously, if there's an OP or a forecast in place, we would be driving to those numbers. In this situation, it's a little bit different where I think the longer term plan horizons that we've got are already exceeded. So we're going to be reestablishing what that projection of population is going to look like. One, based on some of the more recent trends in terms of our occupancy patterns and what's been happening on the ground. And two, in terms of the forecast of new units, what we feel the population is going to look like. And there's, in the DC world, there's kind of two population numbers you'll see. There's a census and a net population number, and then there's a population in new units. And the population new units is a function of who's going to be residing in those units, which is sometimes a different number than the census population, because the census population takes into account a decline or adjustments in your existing base over the planning horizon. So there's two numbers that we'll have to look at, and we'll take the councilor's comments and we'll work with staff to look at that. But again, it's all, we're trying to balance all figures and work within the confines of the DCA as one, and two, within the data that we get from StatsCan, because that's where we can get challenged if we start to deviate quite a bit.
And I just wanted to comment on, so that if we just picked a number out of the hat and the development community was not happy with that, that would be a challengeable item that they could challenge at the OLT.
Correct.
Okay. So we got to be sure that we can defend that number. Okay, thank you. Councillor O'Leary.
Through the chair, I'd just like to make a suggestion. Instead of estimating and guessing, why don't we go back to the original, say, the Colgan development, say when it started 7-8 years ago, and find out what their estimate was, and then have somebody go and do census today and find out how many people are there today. Because there were 72 homes there now. There's like almost 700 some homes there today. So the population, they'll have the population from 7 years ago or 8 years ago. And we have the population today. You extrapolate that into your numbers the next 7 or 10 years. And I don't think there'll be that much of a variation, because the growth pattern has accelerated in this last 3 to 4 years. So I don't know if that's how it could be done, but I would think that would be a good basis to start it upon.
Would you like to comment on that? I'm not sure if anyone has ever done a municipal-wide census.
Through the chair, it's usually not initiated at the municipal level. And so the formal census by Statistics Canada will be a 2026 initiative. But those numbers won't get released until 27 or midway through 27. So it'll be after this background study process. We can do is we can take the on the ground units. Like we can't use or extrapolate your 2000, your previous 5-year census period. We'd have to look at actual permits and completions from 2021 up to now to get an updated population number. So we're using units and updated information, but it won't be a knock on the door census the way they typically do it.
Councillor O'Leary.
Supplement to that, we have staff, we have employees. I'm not asking you to go door to door, every household in the township. I'm talking Colgan specifically. There were only 72 homes in Colgan prior to the development. Now there's over 700. How long would it take one man or two men to walk through that community, knock on every door, and ask how many people live in this household? You don't have to name them, just ask them. So, I mean, it's pretty straightforward, I think.
So I agree, it's quite possible. I don't know if it's defensible though.
I mean, I can't comment on one staff's capacity or ability to do that. Or I'm not sure if there's also legal requirements. I mean, if you can start asking and what you're going to get. So I'll kind of stay clear of that. But I know it's possible. Anything is. But just as a data source for the DC study, it might be difficult to quantify in the timeline that we're looking at too.
All right, any further questions on, I don't think you finished all your comments on this slide, or did you?
This slide is done, yeah.
All right, let's move on to the next.
So we look in the development-related capital program, and this is one of the requirements here that the capital costs must be identified and council must express their intent to undertake the capital works. So we have to show that the intention is met to meet the increased needs for services. So part of our official plan, capital forecast, whether we have a 10-year plan or we've got our Parks and Recreation master plans or any other planning documents that you have, council is expressing their intent to undertake that capital works, and that is a requirement of the legislation. The capital costs, again, as I mentioned, have to be reduced by a series of components, one being our grants, subsidies, and contributions, the benefits test, so any benefit to existing development, any shares of the program that are replacing an existing infrastructure, we have to take that into consideration. Any uncommitted DC reserve funds, so money that you have on hand, we take that into consideration. And then any shares of the program that might be benefiting development over the longer term, we would have to capture that and incorporate that into the DC study. So again, there's a specific set of rules here that we have to abide by in our calculation.
Okay. Mr. Simpson?
Through the chair. So ever since I got on council, I've been pushing for a master plan for roads for transportation. And despite that desire being very apparent and being brought forward at every opportunity during budget, it didn't go through the first 2 years because council was concerned that it wouldn't be DC eligible. In the previous budget, we did approve it, but in fact, somehow it became a development-related expansion analysis, a study which came to this council about a month ago, 2 months ago, and this council has not accepted it. We've been waiting to speak to you about it before we can accept it, because frankly, I'm very disappointed with that report. They identified certain things, but didn't apply those and put a number allocated to those projects. So they would say things like, oh, you need shoulders for certain roads. And again, these are only roads, that they just said it generally. Are we able to extrapolate from that DREA and say, hey, if this road needs a shoulder, or if every road leading to a subdivision needs a shoulder, that cost should then be captured within the background study. Are we able to do that, or is that something that the report should have said?
So through the chair, I'll have to look at that report in some detail. That being said, I mean, there's probably some wiggle room to take the directionality of the report and suggest that if these are the requirements to facilitate development, these expansion-related activities can be included as part of your development charge background study. And then through our DC, we would identify on this road, this is what we're doing based on the recommendations of the previous study. So I think there's a correlation there, and then through that, I would still recommend we get that expression from council and the intent of doing this type of work. Certainly, if the study itself identified here your specific projects and your specific roads, and these are the expansion works, and this is what's required, that makes the line of sight a little easier of saying here's what the needs are, and this is what goes in the background study, and it's quite specific. So I think we can take the directions of it, long as it's tied to growth, and it's suggesting that we need to do this as a part of facilitating traffic volumes and those types of things. And I think there's a good link there.
One of the projects that DREA identified was having an additional turning lanes at intersections. However, the intersections that they identified were on a provincial highway. In my understanding, that's not permissible for DC background collections. Would you be, what would your thought be on that?
It depends on who's actually undertaking the work.
Okay.
Would the township be the ones responsible for the cost, or if it's the province or the county?
My understanding is if the highway, being an MTO
Suggest you're not
property,
responsible.
then it would not be we would not have any ability to do anything there. It would have to be a provincial project.
Correct.
However, we have, because that was identified, are we able to say that, well, certain roads in our municipality that are within municipal boundaries could potentially warrant such expansion analysis, or could warrant those additional works because of growth? Is that something we can extrapolate from that report, because they've identified these are certain things we need to watch out for?
Yes, I think there's the latitude to look at specific projects and specific intersections which might warrant it. Again, in the absence of that study actually saying this is the project, but it's giving you the policy effectively to say, here's the recommendations that need to be looked at. But it'd be up to staff and yourselves to say, okay, these are where our traffic volumes are, this is where growth is occurring, and this is the trigger for it and why we need it.
That's just the problem, is
Yeah,
that this
it didn't
report
say that.
didn't say anything that was relevant. It identified, I believe, $2 million in works. And those projects did not include shoulders, did not include additional works that inevitably would be required with any growth. So I guess, if that being the case, if we were to commission a comprehensive transportation master plan, multimodal transportation plan, would that then be covered entirely by DCs? And I understand that if council were to today say, let's do this multimodal transportation master plan, you would not be able to include it in the current DC background study, correct?
No, through the chair. So we've included the TMPs and multimodal plans in our DC studies, and a large share of that can be DC funded. So I'll have to look at the scope or the intention of the work. So there's a link there, but it wouldn't be completed today. It would be included in 26. So we would be including it in our background study.
So is there an opportunity at this time to include that, or to have council say, we have an interest in doing this, have it be fully background, like have it be fully paid for by DCs, and then include it in the current iteration of the DC background study?
It would be correct. Any
That would be
expression of
possible?
every expression of intention, and our capital program would be starting in 2026. So we would include it in that background study, should council desire to do that. And this decision doesn't have to be made today, but we can bring that back and talk to staff about what that scope of work might look like, the timing and the cost for it.
Would the results of that be included in? No.
The timing wouldn't work.
The timing wouldn't work. And that was my point, is that the timing wouldn't work. But if, let's say, you come out with this background study in the next year, and then because we've now have this intent to do this multimodal transportation master plan, and it comes forward in 2027, would an update be possible to the DC background study to incorporate that aspect of it?
Yes, and through the chair, that is one thing that I wanted to maybe also reinstate, that there's a 10-year bylaw on it. You can update at any time, and a community like yourself that's going through so much transition in growth, and seems like there's a lot going on. I would encourage you to review the DCs fairly regularly. So it doesn't have to wait the 10 years. It doesn't have to even wait the 5 years. If there's significant changes in your growth, significant changes in your capital program, those are the types of things that you might want to look at to trigger a DC study update earlier, particularly if you've got new costs. And other municipalities have done that. You just always have to weigh it against. There's a lot of also legislative changes happening, so it might be at the detriment to a municipality to open up early if they usher in a whole new series of legislative requirements that could actually reduce the rate. So you might have to do that kind of qualitative or sensitivity test, but you can absolutely do that update.
Thank you. I appreciate those comments. And I assume that's the case for secondary studies as well. If additional planning applications were to come forward, that would require a secondary secondary plan for a certain settlement area, for example, correct?
Yeah, secondary plan studies can be included. And again, if new growth comes to fruition that we weren't anticipating, we can include it and we can update the background study. But again, there's always a correlation to capital costs and growth. And even if things don't happen one-to-one, because it's not always going to be the case year over year. So I always like to look at a 5-year trend, 10-year trend on your development. Our market right now is much different today than it was even a year or 2 years ago. And I expect there's going to be continued softening over the next little bit, but then things might pick up. So the timing of development is going to be much different and the growth forecast. So that's why we always like to monitor the DCs, monitor your projections, and you have the ability to update early if you need to.
Thank you. Appreciate it.
I appreciate that. And just based on my opinion from what I've seen so far with some of these reports, and you take a look at the development related report, and it's certainly development related, but I believe the costing in that report is only the development related costs and not the existing costs. So I think there's a concept if we were going to develop, for example, the 6th concession, which they recommended having shoulders on, just saying it costs $1 million, the shoulders only cost 300,000. Development would, the DCs would pay the 300,000. We'd have to pay the remaining cost to resurface or reconstruct that road. So I believe that's the cost. And it's also my thought process with that report, because it does indicate certain intersection improvements or other options for the county Simcoe or to the MTO, that staff now has that information when they're having those discussions with the county or MTO in the future, that's a recommendation that they can take into consideration. So it's certainly been my full intent that that information will be shared with the other parties so that when there is development in the area, they understand what the, well, to be honest, we paid for a report that they don't have to pay for, which gives them recommendations to provide to the developer in the future. So I think that provides some clarity to the other parties as well as the MTO and the county of Simcoe. And I just wanted to follow up on the point about secondary plans. So not sure if that would be a DC eligible item anyways, because if somebody came in for a secondary plan, they would pay for that secondary plan themselves as a developer. Yep. So we wouldn't, unless there's any peer review or something that we could capture within our development charges, but the actual plan and study would be completed by the developer and paid for by the developer.
Yeah, and then we just always have to be careful. Again, the kind of sometimes especially some of these studies that get done on the development related ones, they may be speaking to whether it's local infrastructure that the developer would be in place anyways, or DC infrastructure that the municipality would be responsible to be putting in. So that's part of that local service policy and understanding what is your responsibility, and we stay in the township's lane in terms of your costs. And the same with studies. If the developer is picking up the study as part of their agreement or their requirements, then we wouldn't be including that study in the DC because it's already being paid for independently. So that same rationale would apply.
Okay. Clarity. I have Councillor O'Leary and then Councillor Meadows.
Through the chair. Andrew, I'm just curious, is there a rule or regulation or a specific standard that roads and bridges, like, is it within a 6-mile radius that these can be DC charges, or is it just directly in and out roads or like anything like that? Because there's a lot of bridges, and there's the 6th line north, which is a broken front, undeveloped, that would be and should be developed, because that way it gives you four different directions to come into the city proper, right? So I'm just wondering, is there a specific rule or something stating the radius or areas to be covered?
So through the chair, that's an excellent question. So there's no direct rule, but the Development Charge Act, when they talk about local services, it's anything that's internal to a development is typically going to be developer funded. So any local roads, internal, local water mains, those are all. And then there's also parts of that's also external to a development, but related to that development. So for example, we have a traffic signal that leads or an intersection improvement that's directly related to that development, and the only reason for that intersection improvement is related to servicing that development, then we would say that although it's not internal, it's directly related and adjacent, and that would be a developer responsibility. That goes back to that local service policy, and part of what the province is trying to get at, to making sure that there are some clear delineation as to what's local and what's not. And then other municipalities use like kind of right-of-way widths as a determination. So it can get quite specific. Not to suggest we need to go that way here, but we do need to put some parameters of what's considered local to that request. Does that help? Good.
Thank you.
Councilor Meadows?
Yeah, with regards to the county roads and stuff like that, would we be responsible for any of the infrastructure on any of the county roads as far as having to put money in? Like I'm talking about basically land expropriation as a like for our DC charges, or would that all, let's say the two roads I'm talking about are both county roads, and there's a possibility of the need to expropriate land in one of those areas. Would that, how would that affect our DC charges, or would it just be the county DC charges? I'm not sure.
So through the chair, again, it'll be specific to each development. In most cases, if it's the works on the county road and they require some land requirements in order to facilitate that work, they would be paying for it and it'll be funded through their DC.
Okay.
We have seen in some instances in which the county is responsible for the road works, but let's say there's bike lanes or multimodal kind of active transportation works. Some of that active transportation work would be the responsibility of the local. So those costs would come in the DC, but not the actual road work themselves. So it is still site specific, but if there are any projects that are on county roads that something's going on and the township is responsible for a part of that work, we would look at that and include.
Yeah, because that was
share.
in that traffic study on the Four Corners.
Okay.
A light had to be put in on the Four Corners there, and I have a feeling that yeah, that's. So I just wanted to make sure that it wouldn't be in our DC charges.
That's right.
Somebody's looking into it.
Someone's looking at it. Yep.
All right, let's continue on the next slide then.
Great. So if we go to the next slide, we have our eligible capital costs. So there are, things that we can consider in terms of what can be funded from DCs. And just to give a bit of an example here, cost to acquire and improve land, that could all be eligible for DCs. Building and structure costs, rolling stock, so new fleet, fire vehicles, that's all eligible. There is a requirement that they have to have a useful life of 7 years or more. Furniture and equipment, the only exclusion to that is personal computer equipment. Those can't be eligible for DCs. Library materials, if you're providing the services, and any interest in financing costs. One thing that we will do is we do cash flow our DC rates in most instances. So we take into account any financing costs the municipality might incur to undertake some of these projects. We always want to consider when we're looking at the capital program and what's eligible, we're tying in that capital forecast with our master plans, with our documents that say what is actually required. Any project that benefits new development, expands the municipal servicing capacity, that's all DC eligible. Any development related debt or negative DC reserve fund. So if we have any existing debt on hand, that's DC related, we can bring that into a future recovery. Same if your reserve funds went into a negative position to fund a capital cost, we can recover for that negative balance going forward. So there are some, parameters in which we can do, but always try to think, and one of the things I communicate to staff is making sure that we're trying to tie, if we're building new homes and we're expanding our services, what are the infrastructure that's triggering that? And, most often than not, we're going to get the answers of our typical replacement requirements or vehicle fleets that are just being replaced. Those aren't really growth related. We're not adding to our capacity. But if we are adding to our capacity, we got new roads, we need new plows. Those are all growth triggers, and that's the cost that we want to be bringing in.
So
that could also, sorry.
Sorry, Andrew. So I just wanted to just take the opportunity, I guess, just to to put it out there that, again, these are capital costs. And so operations, maintenance, manpower is not something that we can put into the DC bylaw, and we can't capture that. Correct?
That's correct. Operations, no.
Thank
So if we go to the next slide, just to maybe give an example on quantifying the DC eligible share. And this is just a sample capital project for fire protection services. Let's say we are building a new fire hall. And I know there's some discussions around that currently, but these are hypothetical examples. A new hall is going to be constructed. It's 20,000 square feet. It'll give us new apparatus space, new space, a larger footprint in general. Our existing hall is 10,000 square feet. And as part of our new capital program here, that existing hall is intended to be decommissioned with the construction of new space. So when we think about it from a DC lens in DC world, yes, we're building 20,000 square feet, but our current service level already provides for 10,000 square feet. So when we think about what we can fund from development charges, it's on the uplift factor. So we're going to be expanding space by 10,000 square feet. So even if we have a total cost to construct a 20,000 square foot building at $10 million, we can only recover from DCs 50% of that. So we would base the benefit to existing share relative to the GFA. So $5 million would come from DCs, even though we had $10 million cost. So that non-growth share is the tax-supported funding allocation for that particular project. The only thing I'll mention to that is you'll see on the $5 million that's in the 10-year capital program cost, that's still subject to service level restrictions. So based on our preceding service level, even if we've identified $5 million as eligible, it might not necessarily all be funded in this period. It may have to be looked at over a future bylaw. So there's still that requirement, that test that we have to make to look at the benefiting period and our service level requirements.
So Andrew, just a case in point, and I like the example here because certainly this is one of the items that will be in our DC background study to continue on forward. So in this case, $5 million would have to be funded by the existing taxpayer. And so that's the importance of reserve funds, I guess, so that we have the reserves to match the dollars for DCs. So if that's the case, is there a best practice as to a percentage the municipality should be putting aside? Because realistically, we can't match this dollar value every DC cycle. Right. So is there a best practice as to what percentage municipalities should put into a reserve fund to, whether that be 25% of the full cost to alleviate some of that, or I'm assuming you can use debt to finance this, and those charges, interest charges, would be DC fundable potentially too, and things like that. So I think that's all relative to that. So we don't find ourselves in a spot where we can't fund a project and can't utilize the DC funding. Am I correct in that statement?
Yeah, absolutely. You can certainly, the project comes up, you can debenture finance the entirety of it, and you'd use DCs to fund the growth share of it. So you still apply the, your 50% rule or whatever the BT share is to the growth share, and then the non-growth share, you would use your taxes to supplement it. I mean, the benefit to existing share in most cases is going to be related and goes back to a replacement of an existing infrastructure. So the good thing is that it does kind of tie back to your asset management plan and what the municipality is doing on that front. Because if you do have targets about meeting your service levels and what you need to be replacing to manage your existing infrastructure, you would utilize your asset management reserves and that funding model to fund the BTE shares. Or some municipalities have set up dedicated reserve funds to fund the non-growth share of development projects, whether that's combined with a normal capital reserve or a separate one. We've seen some municipalities kind of do that. So they're only drawing from their development reserve to fund the non-growth share of DC projects. That might make it a little bit more administratively cumbersome, but again, that's something, maybe a legacy thing from some municipalities, but they've done that too.
Well, I know, for instance, for example, and I'll just take this year's budget, for example, for the 2026 budget, like our working fund reserves, we contribute every year to our working fund reserve. This year, we actually spent the entirety of the working fund contribution in the budget. So we put the money in and pulled more money out. So we're actually not contributing anymore to the working fund reserve in this year. So just going back to that point, then we're not really funding future goals if we're using the exact same money we put in and pulled back out in the same year.
Yeah, it would be, I mean, unless when you're pulling it out every year, it's related to a capital project that we've already undertaken here and you're funding the non-growth. But you are right, you're not making any headway with saving up to fund some of these non-growth shares of the projects if you're pulling exactly what's coming in. Yeah.
Thank you. Councillor Simpson?
Through the chair. So I'm looking at this GFA and the increase. So that increase is then eligible for DCs. If we were to say that there's a need for the community to have a community hall that is located within a fire hall, would that then be also DC eligible?
The extra space would be, yes.
The extra space allocated because of that, which can be used by the fire department or by residents as additional event space or what have you.
Yes, so we're still looking at the net incremental space that would be added as being development charge eligible.
So the fact that it's being utilized in a manner that is different from perhaps what is primary goal is not an issue?
We would have to separate that project out though. So if there's going to be a community hall as part of that building, we would hive off, let's just say 1,000 square feet for the community hall. We'd put that in the recreation services capital program and the remaining space would still fall into the fire services.
The reason why I think about it like that is, as we grow, it might take years for certain the population to increase to a level where a full community center is warranted. So in that interim period, perhaps we can slowly increase the level of service that's offered there. And then as the community grows, let's say if a future community center, comes forward, at that time, that additional space can then be utilized as, I don't know, a seniors center or something like that is still providing community services, right?
Yeah, so through the chair, we've done that in other studies where a facility could be used by more than one service, like fire is an example where joint operations between public works and fire. So they'll have public works operating a share of it and then fire operating another share of that building. And then in time, maybe that space then gets transferred back to fire and public works. So when we do the next studies and the next updates, those changes in service levels get it allocated properly in the inventory analysis. So the year in which Public Works is no longer using that facility, we would show that in the inventory and the space being transferred back to fire. So as long as we keep if you're looking at it from a capital perspective, Parks and Recreation, they're still going to have a share of the cost, and we make sure that's covered from the Parks and Rec DC, and fire funds their share, and then that's the way you would account for it. And then the background study that comes after that, we'd count for that once it's constructed, where that space is and who's using the service.
Have you seen appeals by developers in such instances where funds are allocated for something different than perhaps what was originally envisioned in the background study?
So that's a different question. So this is, you're using different funds, long as it's within the same service category. So if you're using Parks and Recreation for the 1,000 square feet community hall, and now that community hall is no longer going to materialize, you're going to build a 10,000 square foot new facility with a pool, then we would just, council would be as part of that process expressing their intent to utilize those funds for that project, which we're going to undertake, and those funds are going to be redeployed. You're still collecting them for Parks and Recreation, as long as they're contained within that service, we're okay. You just can't be mixing service categories unless that money is paid back with interest.
Okay, further questions on this one? All right.
I promise I'm at the end.
That's fine, it's been thorough and the discussion's been good, so.
No, this has been great, yeah. So just to kind of go through our process and key steps in passing the DC bylaw. So we always have to kind of backdate our process to when we're actually going to be passing the bylaw. So we have to release the DC background study. It has to be made available to the public, and it has to be made available to the public 60 days before we can actually pass a bylaw. So there's already kind of a 60-day window in which the study is out there before we can actually do anything in terms of imposing a new DC rate. From that point, we kind of initiate the consultation process. We have to advertise for the public meeting. to hold the statutory public meeting. At that point, we'll likely be receiving further comments from council. Perhaps there's some industry questions and some comments on it, and we'll respond to that. Council will determine if there's an additional public meeting required. And then any changes that arise from that consultation period will be brought forward for adoption at that bylaw passage. So things can change from the time the background study, the version is released for consultation to the end, but I would strongly encourage that major assumptions aren't overhauled in that period, because then we might have to extend out that period, that process. So there might be some modifications, and that happens just through due course of consultation, but we don't want to be overhauling the background study. Once the DC bylaw is passed, the notice has to be provided in terms of the provisions have 20 days within it. And then there's a 40-day appeal period on that bylaw. So within 40 days, anybody can appeal that bylaw. And then a pamphlet has to be prepared within 60 days of passage.
Councilor Mills.
So what's the earliest that we can change the DC bylaw?
In terms of a new passage, I
Yes.
believe we're aiming for spring of this year.
That's on the last slide, Councilor Mills.
Oh, sorry. I was just going, well, I'm just here. I'm just
That's okay.
looking at this. And I'm looking at 3 months. I'm looking at another 20 days, another 2 weeks, and then there's some.
The days back up. Yeah.
So we're looking, I think we're looking into almost summer than what we are spring. So I was just curious.
No, it's fair. So if we go to the next slide, just in terms of some of our key decision points for council. So we have to consider and approve the development-related capital programs, which we will be bringing forward to council for a review. We have to consider area rating, meaning that we have to look at which services are applicable for an area-specific DC. Most of the services that you have are traditionally set at a municipal-wide level, but that consideration still has to be done for the purposes of the legislation. We have to consider whether to hold another public meeting. One's required. You have the authority to hold a second one if you want to, but not required. And then it's consideration of implementation options. So staff and council, particularly council through your recommendation, you have the ability to alter the rates that we've set out. You can't put a rate that's in force higher than what we've calculated, but you can certainly put it in a rate that is lower. And that means you can either put the full rate that it's been calculated in the background study to put in force immediately. You can put a partial rate, you can phase it in, you can have a deferred timeline in terms of when that rate would come into force. So there is some latitude on the way you want to structure the charge itself. But again, there's limitations in terms of you can't exceed anything that we've calculated. And certainly we have to make sure that if there's any exemptions that you want to put in and discounts, you have to be made aware that those have to be coming from non-DC sources to fund that difference. Through this process, we're trying to be as outright as possible and engage council through that. Partly why I think this was a really good discussion today, to get a feel of council's intentions, what some of the priorities are, and give us some information to go back to staff with as we further develop this process. But we do want to make sure that you're well involved and well informed of everything that we do. So we will be coming back to council with the drafts, and certainly before we release something publicly. If we go to the next slide, just in terms of the timeline, there's certainly a bit of a fast track here and an intention to try and get the background study and bylaw passed sooner rather than later, with the intention that we kind of thinking about the end goal date here of May of being our timeline. We do have to have those other events in place, meaning we have to release the study, we have to have a public meeting, that all has to occur prior to that. So we are going to be looking, kind of moving things along quite swiftly in the new year, and hopefully back to council sometime in Q1 about draft results and rates. But we're kind of playing things day by day with just everything that's going on. But I think we'll be working closely with staff to kind of iron out a schedule that ties to staff and council's needs.
So Andrew, I got a couple of questions, and just for the timeline's sake, it's been a practice we don't hold public meetings here in July or August, so that's probably why the intention is to have the public meeting before summer, no later than mid-June. And I just wanted to ask, you indicated earlier there's the statutory requirements for notice because the newspapers have, disappeared, gone extinct. That it's all electronic. The notice provisions to the agencies, have there been any changes there, or are we still required to provide notice to the same core agencies? Is that all by electronic means now, and how does that work? I'm just looking for clarification.
Yeah, so for the public meeting and the passage of the bylaw, if you don't have a local newspaper, you can post it online. At the time of passage of your bylaw, you do have to notify the county and the education levies as well to make sure that the boards are aware that you've passed the new bylaw. So those requirements still stay, but generally speaking, as long as you've posted it on the website, if you don't have a local newspaper, you've met the test of the act within the timeline.
Okay. All right. So open it up for any further questions to council or staff, if there are any further questions to Andrew. Councillor Simpson.
Through the chair, I don't have a question, but I would like to thank you for your presentation. I look forward to seeing a background study that helps us get to a development charge rate that is very close to what New Tech has. Thank you.
That might be an unrealistic goal.
Yeah, that's right. That's right. I won't comment. Yeah, that's right. Feedback taken.
All right. Any further comments or questions? All right. Well, I echo the comments about the presentation, and thank you very much for coming in and doing that. I know you have already had some preliminary discussions with staff to start forming the background study. So looking forward to hearing more about that. And seeing none other, so there is a recommendation that the presentation from Andrew Marabella, Project Manager, Hempson, regarding development charges background study, council information session be received. And do I have a mover for that? I have Councillor Meadows, seconded by Councillor Cox. All those in favor? And that is carried. All right, so we're on to item 5, which is a confirmation bylaw. That bylaw 2025-064 being a bylaw to confirm the proceedings of the Council of the Township of Adjala-Tosorontio at a special council meeting held on Wednesday, December 17th, 2025 be enacted. And mover, please. Councillor Simpson, seconded by Deputy Mayor Laux. All those in favor? And that is carried. And it is just before I adjourn the meeting, I just want to take this opportunity again to wish everyone a Merry Christmas. This is our last scheduled meeting for the year. Barring any unforeseen circumstances, and wish everyone happy holidays and enjoy, and see you in the new year.
You as well.
All right, so I will adjourn the meeting at 11:06 a.m.